Welcome to the Architecting and Stilettos podcast. If you know us, you know us. And if you don't, hello. I'm Arlene Ajurian, joined by Katie Flores.
Hello.
Here at AMK Studio, an architecture and planning firm in sunny SoCal. We typically get invited by developers, entrepreneurs, nonprofits, and luxury home builders who are struggling with the big three: maximizing site value and profits, obtaining approvals, and creating the ideal solution that will best achieve their goals. When the final design is as buildable as it is green, creative, and joyful, that's the win-win we're looking for. This podcast is about how we get there. We share stories, focus on real-world, behind-the-scenes challenges, and candid discussions, all while playing well with others. Abe, thank you so much for joining us today. We have a lot of people that would love to hear about some very pertinent questions, right? And we've been chatting with you for a little bit, and you've got so much really good information to share, whether it's we've got homeowners that might be in shock, business owners that might be in shock, and they don't really know how to start per se, or there might be glitches along the road that your insight would be really valuable, right, to have as a with all your experience, your 22 years of experience in insurance. So, let's start with maybe just the basics, right? Like, if I were someone who looks at my insurance policy and I'm looking at replacement value, like what should I be looking for? What should my takeaway be so that I'm prepared for on this?
I would say if you're one of the unfortunate people that lost their homes in the recent fires, the absolute first thing they must do is figure out a way to get a copy of their policy. So their first phone call has to be to their agent or their broker,
Right after the bank, right?
Or the insurance company.
Right.
So you have to get a copy of the policy. Why? Not necessarily to prove that you have insurance, because you can call an insurance company and give them your name and address, and they'll pull up, the policy.
Mm-hmm.
But for the policyholder to have a way of actually pouring through all of the details of their policy to figure out what they're owed. All right.
Mm-hmm.
So once they have the policy, the most important pages on the front end of the process are what we call declarations pages.
Right.
And those are the pages that say, okay, here's my policy number. This identifies who this policy belongs to. It's got my name on it.
Right.
The effective dates of my policy, and if the policy was still in force, what you paid for it, and who the insurance company is, and very importantly, what limits of insurance did I have, to cover the physical structure,
right,
whether it's a liability claim or property claim, that type of thing. So declarations page is a key term that insurance people use all the time. And those are the first things that you look at. And then behind those declarations pages are what we call policy forms. It gives you the actual language of the mechanisms that are triggered, how they're triggered, and how that coverage actually works. So you want the whole full policy document, and insurance companies by law are required to get that document to you pronto. And maybe it's 30 days, maybe it's 20 days, but they have to get that document to you very, very quickly, after you've made that request.
Okay.
And if they don't, the insurance, that agent or broker or carrier is at risk of, bad faith, claims handling, or managing clients. I mean, so the insurance people are going to be responsible, and they're going to get you that information as quickly as they can.
Okay.
And it shouldn't take more than a couple of days, frankly.
Let's hope, right?
Yeah.
At this time of need. So when we were talking between us, there's a lot of talk about replacement cost, which is a big word. And then we were talking about potential tariffs on lumber and costs going up and all kinds of things that are related to replacing a building, but not
Mhm.
quite from the insurance standpoint.
Mhm.
Can you give us a definition of what replacement cost is? What does that mean? And if I have $100,000 worth of like a house that is worth, let's say $100,000, which nobody's house here is worth 100, but I'm just trying to like simplify. What does that mean if I've got, the timeline of like when the policy is signed, when the disaster happens, and during the course of construction, I might have, you know, price gouging and lumber costs go up. How does all this kind of interplay? Can you give me an idea?
Yeah, okay, so I try and get technical when somebody's asking for like a definition of some kind. I mean, it's not going to be word for word definition that you might find in an insurance policy,
I'll
but
take what you've got.
I'm going to
Yes,
give you
for sure.
the legal gist of
Yes.
replacement costs. All right. So if you own an item, I don't care what it is. It could be a pen, it could be a watch, it could be a structure, a house, a building. Essentially, the cost that to replace that structure as it was before the damage.
Mhm,
Okay.
mhm.
So in some cases, when you have like a 40-year-old home, people cannot rebuild you a 40-year-old home. They're going to build you a new home, right?
Right.
So the way replacement cost works is you identify the value of replacing that thing after a loss, but in today's terms,
And
right?
at the time the premium is signed, the policy is signed, that is, excuse me.
Right. So, but you're going to try to account for things like inflation over a period of time. So the period of time that's relevant in an insurance policy is what we call policy term. And almost all policies for homeowners is 12 months, essentially. I mean,
Mhm.
there might be some instances where it's 6 months with certain carriers,
Right.
but none of the carriers that I ever worked with are 6 months. They're generally 12-month policy terms. Now, you might say, well, come on, inflation over a 12-month period. Well, 7 years ago, maybe that was a negligible factor, right? But in today's world, like post-COVID,
Oh,
as
yes.
we know, inflation has been quite hefty. I mean, the numbers have been big.
Yep.
Whether or not they've come down a bit over the last year or so, I mean, I'm no economics expert, but inflation is a much more real, tangible, considerable factor than it was 7 years ago. So
Sure.
if you're buying a policy today, you have to kind of factor in the potential for inflationary pressures to increase the cost of things like lumber and steel and labor and whatever else goes into the construction of a building or a home. So I would say if you think your dwelling, your structure is worth $100,000 today, and you're buying a policy today, understanding that that policy covers a 12-month period, you might want to establish a policy limit for that structure that's maybe 10% higher than the $100,000. So maybe
Mhm,
110. So you're factoring in some kind of inflationary
mhm,
pressure into
mhm.
there. So maybe the number is 7% or 5%, but it's not $100,000. That's the important thing for people to understand is they kind of
Right.
have to be a little bit forward looking.
Right.
Um,
You did you mention something a little earlier about not it, I mean, before the podcast started, uh an extra percentage that some insurance carriers cover?
yeah, so insurance companies to try and kind of give people incentives to choose their policy versus going to a different carrier will throw in some benefits, or I'll call them bells and whistles.
Yeah.
Some bells and whistles are not really substantial, but
Mhm.
some can be quite substantial. So, for
Right.
example, there are carriers whose homeowners policies will have some kind of um, component or clause or endorsement, what we call endorsements, it's a rider. Some people will call it a rider, or
Right.
basically it's just a document that says, you know, apart from what we're offering you on your policy that you find on your declarations page, we're going to be a little bit more generous and we're going to give you a little more. And sometimes insurance companies will offer 10% above the stated limit on the declarations page. So, so they might say something like, we'll actually cover your building or your dwelling for 110% of the stated value on the declarations page. Some carriers might even offer 125%, but that's a detail that you would have to pour through your policy, talk to your broker, your rep, and see whether or not there's that type of provision that exists in your policy. Some, some carriers do it. I would say most carriers don't. That's my experience, but it depends on who your carrier is. But you definitely want to look for that, because if your limit on your policy was $3 million, for example, on your policy with State Farm or whoever the carrier was, and if they've got a provision that says 110%, and you had a complete loss, and when you get your bids from the contractors that say, well, it's going to cost you 3,500,000 or 300,000 to rebuild your
You're going to need
policy.
that. Yes.
Your policy gives you that extra wiggle room. And that would be great if you had that type of policy. So you want to definitely look for those types of provisions. And the person that you bought the policy from very likely knows whether or not your policy contains that type of provision.
Right. Well, so then coming to that point, if I'm in the unfortunate position of now I have to file a claim, there's shock, there's grief, and there's that really rough phone call. I'm calling my agent. What do I need to be prepared for? What do I need to do? How do I start this process?
It's a great question. Look, I mean, chances are most people don't know the 1-800 number to insurance company ABC, regardless of how long they've been insured. But oftentimes they've had a lengthy relationship with their broker or their agent, 3, 4, 5 years. And sometimes they might even have that person's phone number on their auto dial so I would say the first person to call is that rep. And if you can't get hold of them, keep hitting zero until you get hold of a live body. And then if you can't get hold of your agent or rep, but you know who your insurance company was, well, then get that 800 number off the internet, whatever, and you start making calls until you reach somebody that says, yes, we're the right place to call to file a claim. But very often, for example, I mean, agencies like ours, we have a department that is dedicated to claims handling. So from A to Z, you don't have to call your insurance company. You just call us, and we'll do all the legwork and set everything up to the point where there's an adjuster assigned to your claim who's making contact with you, and then we do regular follow-ups to monitor the progress of that claim. But start with the broker or the agent, then the insurance company. And
then what do they need to see from me? I mean, let's say I have my address and it's obvious that it's in a area that got hit really badly by the wildfires. We might even have, one of my questions was wind damage, because there's lots of people in a much more, broad area that have wind damage too, but we can tackle one at a time. So if I have somebody who lost my home, right? What do they need to see? Like, am I supposed to be pulling photographs off the cloud immediately?
I would say on the front end of the process, which is notifying the carrier of your loss, you don't need anything. You don't even need your policy number, frankly, because chances are, if everything is gone, whatever paperwork you may have had is probably gone as well. And nobody memorizes their policy numbers. Whoever you're going to reach out to, whether it's your agent, broker, or insurance company representative, your name, your address is sufficient to get the ball rolling, to identify that you have a policy, what that policy is, the policy number, et cetera, et cetera. And what you're trying to do is you're giving notice to the carrier, and what you want is them to assign somebody who's going to handhold you through the entire claims process.
Right. Start that
And
immediately.
and
Right.
that person is basically an adjuster,
Yeah.
claims adjuster.
Right.
So once that person is assigned to you, they're going to ask you all of the pertinent questions about the details of who you are, where you live, what was lost, and they will tell you whether or not you need to start putting together lists.
Mhm.
Um, so
Right.
they're going to handhold. And by the way, in circumstances like what we just experienced in LA, I mean, we're talking devastated communities.
Right.
Insurance companies know that it's going, I mean, this is not it's not a normal course of action.
Right.
They're probably busy hiring more people on staff temporarily as claims adjusters. They will contract out to third-party independent claims adjusters who will represent them. So they're going to invest a lot of money into putting in resources so that people have representatives who they can speak with.
Some help. Yeah.
Yeah. So, you know, and insurance companies might be actually communicating these
Right.
efforts to their to the communities, and they might put
Right.
things in newspapers saying this is what we're doing,
Mhm.
airing you know, ads, something on television,
Mhm.
radio, etc. But they'll make it known that resources are being put in place.
Right.
Additional resources are being put in place
Right.
to be able to manage the flood of phone calls they're going to be receiving.
Right.
And that, you know, I mean,
Mhm.
in certain circumstances, they will fly in people from different parts of the country
Mhm.
who don't
Just
have
to be
any
able to,
disasters that they're dealing with.
yeah.
So they might be, you know, employees of company ABC,
Right.
but they'll house them, you know, temporarily in Los Angeles, what have you, or maybe outside of Los Angeles, because it's hard to find hotel space and apartments these days. But yeah, the resources will be put in place by
Okay.
the insurance companies. And in some instances, even brokers, the larger brokers, may be putting resources together. And if at the very least, they can be informational resources. So on their website, who to contact, you know, if you need carrier number, you know, phone number to this carrier. But there will be a lot of people that are
Yeah.
available to help.
So as I'm going through the process, and I've alluded on the previous episode, I've alluded to the fact that I myself lost a home in the 94 earthquake. I have a little bit of experience going through insurance policies and working with adjusters. The timeline and I guess the process might be lengthy, right?
Yeah.
So patience is definitely key. It's not the same, like obviously earthquake, wildfire, two totally different things, but there's some similarities, and the timing might be one of them. So how would somebody know whether or not a third party adjuster might be necessary? Like, what if things are moving too slowly, or if I'm, you know, if there's a concern that the money being offered as in terms of a payout is not enough, is not sufficient, or it's not per the policy. Any thoughts on this?
I do have thoughts on this, but I want to state for the record
Mm.
that I'm not suggesting, recommending that people do one specific way versus
Mm.
another specific way.
Okay.
There might be, you know, a million reasons to contact a public adjuster who represents you know, the individual and not the insurance company or even an attorney. But I would say that there are probably resources that people should try first before dealing with public adjusters and attorneys. And the reason I say that is because public adjusters and attorneys are in the business of charging, you know, a
For
fee
their
for
services.
their service and their
Right.
time,
Mm-hmm.
right? So you know, it's not likely that anybody's going to volunteer their professional service for free.
Makes
Um,
sense.
Now, if you're fortunate enough to be dealing with an insurance professional who's been in the business for long period of time, they have a lot of knowledge about insurance policies and insurance mechanisms, how policies work. They might not be experts in claims processing necessarily, although some agencies do have claims, experienced claims professionals, people who used to be adjusters working for insurance agencies that can help people through a process. But the point I'm trying to make is that if you're contacting the insurance professional, they're not going to charge you for their time to help you walk through the process. And at the very least, they can give you some preliminary guidance. And then if your policyholder feels that they're not getting enough information, they need more, they feel more secure having an attorney or a public adjuster, by all means, contact
Right.
somebody, and your broker or agent could probably refer you to a public adjuster or an attorney that specializes in handling claims of these
Interesting point.
types.
Right.
Yeah.
That's true. I mean, but your recommendation is to kind of reach within your circle, talk to your insurance, obviously, agent, and then perhaps there's a broker that and you can go to for some advice.
Absolutely. Go to
Right.
the broker first, because it's going to be a free source of information for you.
Right.
And they can do a lot of work. And in some cases, I've heard many times over my career in insurance, there's a particular personality type that tends to
Mm.
build a career in insurance. We're facilitators, we're pleasers, we like to help.
Right.
So, so chances are you're dealing with a facilitator that's going to make themselves readily available to walk you through things and give you guidance for free,
Yeah.
for no obligation,
Yep.
because that's kind of like their nature. And that's what drew them into the world of insurance. Because at the end of the day, yes, we make a living selling things,
Mhm.
but really what it's all about is helping people through crisis management. That's kind of what it is.
Yeah. So you answered one of my main questions, which is it's not necessarily a given that I should be looking for a third-party adjuster or an attorney from the beginning,
It's
from
not
the
a given.
get-go.
And I'll tell you why it's not a given. If you've lost everything in a fire
Mhm.
and you had what many people call fire policies, it's a term that's kind of like outdated, but people still refer them to fire policies, just ease of understanding.
Yeah.
But if you had a fire policy, guess what it covers? It covers fire. And if you've lost everything in a fire, what's a public adjuster going to tell you about how much money you can recoup if you've lost everything? You got to recoup everything.
Right. Which is
Whatever
basically
your policy says that you have the right to recoup, you have the right to recoup. Now, it's a different scenario than when somebody has a water damage incident in their home, right? And I'll give you an example, a real example that I'm familiar with. Somebody put in had their dishwasher repaired, and there was something put in and it wasn't installed properly, and they had a very beautiful home with beautiful floors, and water came out and they didn't know for like 2 hours, and the entire kitchen area of their floor was damaged, right? Well, insurance company adjuster might say, okay, you lost 500 square feet of flooring. Here's what it costs to replace 500 square foot of flooring. And this is the type of flooring it is. And then you're like, wait a minute, a public adjuster might come in and say, no, your line of sight extends beyond your kitchen. It goes into your dining area. It goes into because you've got like one of those open concept, and it extends all the way into your den area, and it's all the same type of flooring, and you cannot replace 500 square feet. You must replace the entire flooring for that first floor because it's all the same material, because you cannot have
a little
500
patch
a
that's
little
been
patch that
replaced.
looks like
Right.
brand new,
Yes.
and another
Right.
patch that looks like it's 3
Yeah.
years old. So
Right.
an adjuster might have that expertise and say, no, the claim is for the entire floor.
Right.
But by the way, so can your insurance broker give you that insight.
Right.
And
I mean,
maybe an attorney has that insight. If they're experienced, they might.
yeah.
So there are circumstances where I think it's more obvious where you might need a public adjuster. But I would always start with the insurance broker first, because now you're going to get free advice.
Right.
And then somebody might say, you know what? I think in your case, it's it probably makes sense to have a public adjuster help you through the
Yeah.
process. But when you lose everything,
Right.
I will question whether it makes sense to hire public, because at the end of the day, that public adjuster is going to charge you a fee. And oftentimes that fee is somewhere around 25, 30% of your recovery.
And
So
this is the limit of insurance that you were mentioning before. I mean, the limit is a limit. So,
if you have $1 million limit for your dwelling,
right,
and your public adjuster says, yeah, you have the right to claim $1 million.
right.
And then, by the way, you got to give me 30% of that. Well, now you only have $700,000 to
What
rebuild your home.
you just
It
wasted some
doesn't
money.
make
It
sense.
doesn't. And I agree with you on this. That's really excellent point. I mean, the example that you brought up with the water, may I ask, is it the same as, okay, let's say a tree fell on my house. The house is not a total loss,
Right.
but I have some damage that needs to be assessed, and I have to assess the damage from a structural standpoint as well as an aesthetic standpoint. So if an insurance adjuster suggests you could replace that part of the roof, but it doesn't really match perfectly with the rest of my roof because for some reason, that material is out of stock or whatever, is that the kind of situation you're referring to?
Yeah, I would say if there's a partial loss,
Or smoke, for example. Smoke's a different one, but smoke is
yeah,
also related to this.
any type of loss, if it's a partial loss,
Mhm.
insurance company, I mean, look, I don't want to suggest insurance companies are bad by nature. They're evil entities. A lot of people will do that. I mean, I'm in the insurance world, so most of the people that I meet, whether they work for
Mhm.
insurance companies or insurance brokerages or whatever part of the process they're involved in, they're generally
Mhm.
people who are there to help. But they like to help people,
Sure.
including insurance adjusters. But
Yeah, you're not
we've
in this line of work to screw people over.
right, but we've heard of those stories where
Right.
insurance companies try to take advantage, or they try to limit the loss, et cetera, et cetera. So I get it. At the end of the day, if somebody is trying to limit the recovery, what they're going to compensate you for when you have a partial loss, that's where it starts to get really, um, questionable whether you're getting everything that you deserve to get.
Right.
Because most people, they've never really experienced a large insured loss. They've never had a disaster happen to them. So they don't know what all of the mechanisms are that are available to them. You need a professional. So you want to go with the cheapest professional first, or the free professional, and that's always the insurance guy, the
Yeah.
broker, the agent. They have a lot of information that will guide you, and in some cases it's enough. In some cases it might not be enough. That's where you bring in the people who are there to charge, they'll give you their professional service for a fee. And I mean, that's legitimate. They're there
Yeah.
for a reason and they make sense. So if you're not sure, start with
Yeah.
your
Yeah. Yeah.
insurance professional and
Right.
then take the next step when it's necessary.
And so you kind of alluded now to the difference in the claims process a little bit between a total rebuild and, a fire, just a smoke damage or a wind event kind of, you know, process. There's difference in those things. And it's good to know that, an agent might be necessary when you've got some damage, but not total damage. And that depends on the situation.
Well, one of the factors that comes into play, and it's a significant one, is the type of policy that you have. Not all insurance policies are the same.
Sure.
So over the last couple of years, a lot of people, especially in greater Los Angeles, Southern California region, or maybe all of California, have gone through this process of getting non-renewed or um, probably non-renewed by their insurance company. A lot of companies have been jumping out of the marketplace for various reasons. It's a different conversation, but they found themselves in a position where they've had to go with a carrier that they're not familiar with, and very likely it was the California Fair Plan,
Sure.
or it was some other carrier that might be what they call like non-admitted carrier, or names like Lloyd's of London, or
Like
other
not A
names.
plus plus right, rated
Well,
something.
the financial rating of that company might be fine and dandy, but it's not necessarily a household insurance company name that you're familiar with, like Liberty, Liberty, Liberty. Everybody knows that little jingle.
Yep.
So it might be a company that you're not familiar with, and it might be a policy that is considerably different than what you've had for the last 30 years. It might not be a I'm going to use some insurance jargon.
Mm.
It might not be a policy that's written on what we call special form. So there are three general categories for
Okay.
property insurance
Okay.
that determine the breadth of coverage on an insurance policy, right? The broadest type of coverage is what we call special form. That's a technical term. Okay. So there's the English language and then there's the insurance language, and they're not always the
Yes.
same.
Right.
So the special form policy will cover things like smoke damage and wind damage and fire. All fire policies cover fire, but there are other
Acts of
triggers.
God and things. Yeah.
You might call them acts of God, but there are other triggers
Mm.
that not all policies will cover.
Okay.
Certainly homeowners insurance policies don't cover earthquake or earth movement. You have to
Right.
buy an earthquake policy for that. So that's an example of something that none of those three categories of policies will cover. But wind is not, something that not all categories of policies cover. But now, I mean, with all the disasters that we're dealing with, most people experienced fire damage.
Right.
It's almost kind of like a no-brainer, right?
Right.
But some people that weren't necessarily in the path of the fires were also experiencing 100-mile-an-hour,
Correct.
gusts, and maybe tiles flew off their roof,
Yep. And
depending on
hit
the
their
type of,
car or whatever, all this complication. Yes.
right, a tree,
Right.
neighbor's tree fell on somebody else's
Yep.
rooftop and
Hmm.
caused different types of damage. So uh, different categories of coverages will address different types of losses. The fire one, most of the devastation was fire related, but if people have questions whether or not their policy covers wind damage or smoke damage and stuff like that, the first person to contact is the insurance guy that you've been dealing with all along. He'll generally know. And if he doesn't know by heart,
Hmm.
he certainly has access to a copy of your policy and
Hmm.
can get that for you, pour through all
Hmm.
the details and figure out
Hmm.
whether your policies was in a special form or a basic form or
Yeah.
so the difference between these categories, by the way, is the two less comprehensive policy forms are what they call specified perils.
Hmm.
The only things that are covered are the things that the policy specifies are covered and
Right.
nothing more. And
Right.
there's a list. There's either a list of like, let's just,
All the exclusions too.
yeah,
Like,
yeah. I mean, mostly it's just what's included. Now, the broadest policy form, which is that special policy form, basically starts off with a statement that says everything is covered
mm,
except what's excluded.
right.
And then it gives you a list of all the exclusions.
Right.
But that type of policy maybe sounds like it's not preferable, but it really is because it is the broadest policy language you're going to get is a
Okay.
special form. Um,
Okay.
so
So
maybe
that's
going off on tangents, but maybe
no, that's
I
okay.
addressed some of the questions.
It's good info because we're addressing kind of the past, the present, and then kind of rolling into the future
Yeah, okay.
all at the same time, and we're addressing a bunch of different situations.
Yeah, I would say
Um,
that a lot of the people, um, I mean, I saw some statistics in the paper. I mean, LA Times. It was a statement by an executive from California Fair Plan,
right.
and I think the statistics they were offering was that 25% of the homes that were destroyed in the Pacific Palisades were insured by the California Fair Plan. I mean,
Right.
that's a
I
big
heard about
number.
that. That
It's a
is
big number, and we're talking billions of dollars.
right.
So there are a significant number of people who had a policy that was not the broadest coverage form. They had a limited coverage form policy, because at the end of the day, the FAIR plan is like the carrier of last resort. So you're
Right.
not getting all the bells and whistles. You're
Right.
getting something that
It's worse coverage, but it's
it's there at, I mean, that's the worst case scenario availability, right? So you're not going to get all the bells and whistles that your state farm policy was giving you for the previous 20 years. So a lot of people are going to be affected by the fact that they had something less than what they had before they got into the FAIR plan, or
right.
before they got into this other, non-admitted,
Yeah.
um, you know, non-household name insurance company. But again, the people who will have more information to share are, primarily going to be the broker, or the
Right.
agent
And
of that policy.
incidentally, I think you said you had a website or two that are great sources of information.
Um, a lot of the insurance companies are putting out all sorts of information on their own website. So if you were insured with Travelers or
Right.
whomever, Fair
Right.
Plan, you can always Google that carrier name, and I'm almost certain you're going to find all sorts of information relating to the particular incidents that happened over the last couple of weeks.
Right.
And then, of course, um, there's always the Department of Insurance, California Department of Insurance website. And I'll just give it to you and your listeners.
Or I can also add it in the show notes, but please go ahead and we'll replicate that info.
Yeah, I would say insurance.california.gov is the general website to the Department
Okay.
of Insurance. And then they will have a category that says safer from wildfires or something like that. I mean, it's going to be bold, big, colorful. You're going to find the information, and it's
Sure.
going to be relatively easy to find on the Department of Insurance website. And there's all sorts of communication that's been published by the Department of Insurance, by the way, making sure that people understand what their rights are,
Right.
what some of the laws are, because remember, we're not just dealing with a devastating fire, we're also dealing with what the state of California has declared to be a state of emergency.
Sure.
So all sorts of laws and regulations come into play that give people added protection, added benefits
Very good.
as it
Right.
relates to insurance. And I'd be a genius if I could rattle off what all of those added benefits are, but the place to go is the Department of Insurance website, because it's going to be in there.
Sure. And Abe, so you have a superpower, which is basically that you're also, I mean, you're a commercial, you are very commercial insurance versed, right?
Yeah, I spend 98% of my time on commercial insurance, but a lot of the mechanisms and all of the concepts of insurance and how insurance, like all the trigger mechanisms, a lot of them are pretty much the same
the same,
across,
right?
whether it's
Well,
personal lines of insurance or commercial lines of
right,
insurance.
but it's very useful here because for example, we have a lot of housing providers that might have had, 12, 15 units that have gone, they're burnt, or we have businesses that are gone.
Sure.
We might have people that have second homes in these locations that are LLCs that were, they were Airbnbs. I mean, they were businesses. So there's a variety of different kinds of things that are types of structures that might have burnt.
Yeah, different
Right.
scenarios for sure. And in many ways, the fact that, people would have lost their structures due to fire, kind of, there's like a universal, there's a constant between different types of policies, whether they're commercial or what we call personal insurance versus commercial insurance. It's all called property and casualty. Specifically, we're talking about property losses,
Mhm.
not casualty. Another word for casualty is liability insurance.
Mhm.
Sometimes the terms get misused.
Yes.
But we're talking about property coverage, property insurance. We're talking about personal property insurance
Yes.
or commercial property insurance. And just because somebody is running a business, meaning an Airbnb, out of a single-family residence doesn't mean that it's a commercial property.
Even if it's owned by an LLC, just checking.
Depends on the insurance depends on the insurance company.
Right.
Some insurance companies, you know, that's a nuance where I would say I don't have the expertise to answer, but I would say that there are probably insurance companies who can write a personal policy for a structure that's owned by an LLC, and then there are insurance companies who can't, and they say we can't do it, and then your alternative might be to get a carrier to write a policy under a commercial policy form, right? I would say the biggest difference between a commercial policy and a personal policy is what we call time element coverage. So that's kind of like a technical jargon, but it's kind of like, it kind of makes sense, right?
So
Your loss is tied to the length of time
because there's
for
an
you
income
to be
element.
able to recover from the loss. And on personal insurance policies, specifically homeowners, that time element coverage is called loss of use, right? Or they might call it something else depending on the carrier. But essentially, because you have to go live somewhere else temporarily, your loss grows by the day, right? If you have to rent an apartment somewhere else, or you're living in a hotel, every day that you got to pay that hotel bill is additional loss to the, right? It's another
It's a
400
real
bucks a
thing that
night.
we're going to encounter here, which will be my next question. Yes.
Yeah, 400 bucks a night, or $5,000 a month if you're lucky, maybe $10,000 a month, right?
Yep.
In the commercial world, we don't necessarily call it loss of use, we call it business interruption. Well, that's kind of like a layman's term. We actually call it business income loss.
Right.
Or business income / extra expense loss.
Right.
Or we'll use even more jargon like acronyms, BI/EE, right? But at the end of the day, it's a time, the loss grows with the extent of time it takes to recover from that loss. Generally speaking, in the commercial world, many policies give you a 12-month window after loss. Whenever the loss occurs, you get 12 months to restore, and you get
Good to know.
You get coverage for up to 12 months. Some carriers give you the benefit of a 24 period of, recovery, or period of indemnification, or whatever terminology that they use. On the homeowners, you'll have to forgive me, I'm not sure whether it's 12 months or if there's potential for a longer period of time. Or it might be just a particular limit of insurance, and whenever that limit runs out, that's the amount of time. I don't know how a state of emergency will impact that particular element of coverage, and I'm not sure. It's a good question for somebody who's experienced the loss to ask the question to their broker.
Sure. Okay. Good question to ask.
And it certainly is something that can, you can pour through the policy language to find, if I thought of it, I would have researched it before this session. But it's definitely something that people can ask about. So how much time do they have to recover that the insurance company is going to compensate them for?
Right. And
because good luck if you can build your home within 12 months after the date of loss.
Which we know is not going to be, it's not going to be possible, unfortunately. I'm just saying it from my expertise. Yeah.
If you think about it, if there were 8,000 structures in Pacific Palisades, I mean, and it's not like that town was designed on a grid where there's multiple inlets and outlets into every street and every area. I mean, there are cul-de-sac. How did like the logistics involved in having hundreds and hundreds of construction crews going in.
Tell me about it. And even before then, I mean, we're talking about the infrastructure, and before the infrastructure, the cleanup. So we have
the cleanup,
months
building
of
infrastructure,
right?
Because God knows if there were like
Power lines, the
power
power
lines
poles.
and
Yes,
pipes that have to be restored before you can actually put streets back into place. So
correct.
this is going to be
Massive. I mean, and
massive.
from a planning point of view, it's a whole different ball game, which we will discuss in another episode, but it's more like do we do this one house at a time? For some areas, do we want to make it more affordable and do blocks at a time? Do we want to come together, communities come together, neighbors come together? There's like we alluded to that being on a mortgage by mortgage, on a bank by bank basis, where people that have the same that have a mortgage from all the same bank. So I've got maybe 5 or 6 people in the same block, because they tell each other, hey, I have a really good banker, go to them. They may have all, a mortgage from the same bank. So there might be potential for a bank to partner up with the developer, with the residents, and figure out what can we do on a block by block basis. Good stuff for the future, but your estimation of, is it this probably going to take more than a year? For sure. For sure.
Trying to imagine the scope of the activity that has to take place.
Absolutely.
It's hard to imagine.
Yeah.
But I would say safe to assume it's not likely going to all happen within 12-month period.
Overwhelming. I know. It's just
And
from our standpoint to think about it.
so, and this is the reason that it's such an important question is because there is a time limit that the insurance policy is going to impose on the policyholder, right? And now whether or not there are legal ways around it, that's where the attorneys are going to come into play. I don't know. I mean,
Gosh,
I'm starting to feel very overwhelmed trying to imagine the scope
yeah.
of what's going to take place over the next 2 years. So I mean, I feel deeply for the people who are going to
Me
be
too.
going through it. I mean, I have a friend whose elderly parents, they've been living in the Palisades for, decades, and their home was a total loss. And now they're back living with their son, who has a large family of his own. So there are like 3 families living in his home, and he's the only child.
Yeah.
And his parents are in their mid-80s, and
Yeah.
he's the guy that has to figure out how to help them through this process.
Absolutely. I mean, even in the areas like Malibu and Pacific Palisades, Malibu particularly, I know that Trump said Coastal Commission won't be involved, but likely they will be. I mean, that's just going to elongate things even longer. And they'll be up to, they'll have to build what they had before. They're most likely going to have to rebuild in a much stricter way with codes, pull away from the water. All kinds of issues are going to come up. So complications for us to figure out as architects.
But I can say with relatively high degree of confidence that there's going to be a way for a lot of these policyholders to get around this time limit factor. Because at the end of the day, insurance companies understand that it's going to be impossible for everybody to find a contractor to rebuild in the span of a year or 2.
So very good. This time question is such a relevant one, and it's obviously key, but it's key from 2 different standpoints. And one is, I have to rent another place while all this construction is getting done. And for many people that have been in their homes for decades, even those that had, they were fortunate enough to have a really low interest rate on their home. Many retirees too that have really been there for decades. They might have been paying, I don't know, $1,500 a month, $1,000 a month on their mortgage. Their mortgages might have been paid off. And now they're in a state where they have to rent something, right? Whether or not they're 2 people that need a place or a whole family that needs a place. We're looking at costs. I've seen, unfortunately, rental costs go up significantly in the last week, 2 weeks, where, I mean, a basic rental of a house is going to cost $6,000, $7,000 a month. And if I want a apartment, I mean, it's going to cost $3,000, something like that, $4,000 now. I'm looking at nicer areas, of course, but this is kind of like, this is a real thing.
I think if people find stuff for 3,000, 4,000, 6,000, I think they're going to be very happy with that. I think the insurance companies will probably be happy with that as well. I can say this not from the perspective like from I can't give you a legal statement.
Yep.
And I can't give you from the perspective of a claims adjuster and how it's going to be
Understood.
handled. But from experience, I can tell you that whatever lifestyle that you had before the loss, the insurance company is required to allow you to maintain that lifestyle. So for
Okay.
example, if you have a family of 5 and you had residence where everybody had their own room, that's what you're entitled to find and to rent is a home or an apartment that accommodates 5 people comfortably. Of course, when there are 20,000 people looking for that same type of home, I mean, there are going to be limitations and there are going to be challenges. But people should not be willing to settle just because that's what the insurance companies tell them they have to do. People have to be their own best advocates and they have to push for what they know is their right. And their right is to be able to maintain that lifestyle that they've been living since before the loss. So
That's refreshing to know.
yeah,
I
I
mean,
mean, so for example, if your
yeah.
kids go to school in a certain district, you know, just because it's cheaper to rent in Orange County, doesn't mean you have to move your family to Orange County and move your kids to a different school. You should be able to rent a place that's close enough to get your kid to that school now, if the school is also gone, I mean, that's a
That's a whole
whole other
different thing. Yeah.
complication.
Yeah.
But,
Yeah.
but again, experienced insurance
Mhm.
professionals will have that type of knowledge and they can give that kind of guidance for free to their policyholders and their clients. But important things to,
So don't be afraid to talk about it and bring it up and say,
yeah,
I'm
I mean,
sorry, but
there are probably 100 different scenarios that we're not going to think of and talk about today. But
yeah. Abe,
uh,
I'm telling you, I've seen the same home, like they're going for 25,000 a month. There's just crazy numbers right
yeah,
now. So
yeah, and
I feel
all
for
this talk
people.
about the city and state law enforcement coming in and making public announcements that if anybody's caught like trying to gouge with rents and stuff like that, there are going to be like legal consequences and so on. I'm like, good luck trying to monitor what 20,000 people are trying to do. There are people who are going to try and take advantage of the situation. I've seen it happen. I mean, not long ago, I mean, I live in an area where we experienced the Aliso Canyon,
In the Porter Ranch area.
that
Yeah.
gas leak in Porter
Right.
Ranch. And, when you have 10,000 households looking for a place to live, there were people moving out of their homes so that they can rent their homes out to people who were affected by the gas leak
To
and
make a
charging
profit. Yeah.
$12,000 a month for the family to live in their home. Insurance companies were paying. I mean, insurance companies, the gas company, that was
Yeah.
a
Yeah. Yeah.
slightly different scenario. And maybe insurance
Wow.
companies won't be so crazy, but there were plenty of people trying to take advantage of that particular disaster.
Right.
And I'm sure it's going to happen. And I'm like, I hope the government entities are capable of monitoring and correcting all that type of behavior. But
Right. So just to push forward towards our
yeah,
last segment here.
sure.
We had talked about off the camera about all kinds of wildfire hardening measures. We anticipate having another episode where we deep dive into this. But from an insurance standpoint, there are going to be, if I am a homeowner and I've taken the initiative to
Mhm.
clear the vegetation, whatever the radius is that the fire marshal is asking for nowadays, and I'm sure it's going to get revised. I hesitate to say 50 feet. It might be more now. If I've got good brush clearance, if I have the right kind of roof, if I have my vents now covered, not just by an inch of netting to keep rodents out, but now I've got window netting to keep embers out. If I've taken these precautions, chances are I might get a discount on my insurance policy. May I even qualify for wildfire insurance?
It's a great question. And unfortunately, I'm not going to be able to give you an answer with a lot of certainty.
Okay.
Because well, I'll give you a good answer, and I'm pretty certain about my answer, but it's
Mm.
probably not what policyholders are going to want to hear.
It
That's what
is
I
what it
think.
is.
Yeah.
Let's
So let's
talk.
put
Yeah.
it this way. Insurance companies take all of these different factors into consideration when they're looking at insuring a building. But one of the factors that is going to be hard to change is location. At the end of the day, if you're building your home in, on a mountainside or
Right.
canyons or, what do they call these urban
Wildfire
wild
zones and urban,
urban interfaces.
yes.
There's a term that they use
Yep.
now for that, right?
Fuel modification zones. Yes.
If you're going to be rebuilding your home in that area, I mean, you can build it out of steel, and I'm not exactly sure, fully steel structure. I'm not exactly sure what the insurance companies are going to want to do and how to respond in that circumstance, right? Um, all of the things that you mentioned, they're all good control mechanisms that you can implement.
Mhm.
They're important. You
Mhm.
want to do everything you can to prevent things like theft or fire loss or any kind of loss. So it's very prudent. Now, there are things that insurance companies, kind of like components that they will look at specifically. But if you're doing like 4 out of 10, I'm not
Yeah.
sure you're going to qualify for any kind of discount. Heck, they might not even want to insure you. They might
Right.
want to see 10 out of 10 of these
Right.
components being implemented. And I can share some of them with you. Um, um, Now,
Please.
there is something that I mentioned earlier before we started the podcast. Insurance company, not because of these wildfires that recently took place, but because of the hard market that we've been experiencing in California for the last year and a half, 2 years, or maybe a
Right.
little bit
To even
longer.
qualify for fire insurance. Right.
The insurance commissioner has been trying to come up with new rules, new regulations, to try and improve the marketplace so that more insurance companies are going to come back into the market because, one of the problems we've been having is the lack of options, right? And it's causing prices to go up and stuff like that. So one of the rules that they put into place is that if insurance companies are using uh, wildfire scores as part of how they rate, how they price their policies for the policyholder based on the area that these homes are located, then these insurance companies now have to provide much more transparency about these scores and how the policyholder can actually take the proactive measures to improve those scores and inevitably qualify for some type of discount. Now, the crazy part of it is that every insurance company has a different scoring system. So
Right.
there's not a lot of universality in terms of
Huh.
how the score
Interesting.
takes place and what discount or credit that they get and so on and so forth.
One would think that those would be aligned, but okay.
You'd think that there'd be more
Regulation of some sort.
consistency
Yeah.
between different
Right.
carriers, but you know, that's like way out of my realm of expertise is
Right.
how governments address things.
Right. And it might change, right? We might get there.
It could change. But anyway, so they put out all these regulations. And so insurance companies who are using wildfire score processes in their rating system are now sending out notifications to their clients saying, by the way, we use wildfire scoring as part of our
Mhm.
methodology to come up with rates and so on and so forth. And by the way, if you don't agree with the wildfire score that you're getting, then there's an appeals process and here's what it is. And you have to
Mhm.
go, jump through hoops and et cetera to get your score revised or edited or reviewed or that type of thing. It's a lengthy process and I'm not exactly sure how that works because I haven't had anybody in that position yet. So I haven't been through one of these
Yeah.
appeals myself, but there's documentation that the insurance companies are putting out there.
Mhm.
In some cases, you have to kind of do a little bit of research and dig it out. But I found one of these documents from a carrier, and it tells you like what some of these factors are, like these control mechanisms that they can that people can implement that is supposedly going to qualify them for some kind of credit. So I can share some of them with you.
Oh, yeah, please.
Clearing of vegetation and debris from under decks.
Okay.
Incorporation of only non-combustible materials into any improvements to the property, including fences and gates, within 5 feet of the building being evaluated. So
Okay.
it's not enough that you change your roof. You might have to change your fencing
Well,
too, if it's
and
all
that
wood.
comes with the zones that we were
Right.
discussing earlier, which is like, I've got my vegetation zone, and then I've got that non-combustible zone in a 5-foot perimeter around my home, maybe, right? This is good
Yeah,
stuff to
and
talk, yes,
as a professional who's actually involved in the process of building
yes.
structures, you probably have a good understanding of you might even know what all of these different control
Oh, for
mechanisms
sure.
are.
No, like, yeah,
Right.
keep going.
So next one here says removal or absence of combustible structures, including sheds and other outbuildings, from the area within 30 feet of the building being evaluated, or from as much of such area as is under the control of the applicant or policyholder. Now, that's a big sentence. I mean, it's probably like 30, 40
So
words.
in
Uh,
general, that's gonna mean like nothing, you're not gonna have any wood sheds, right? You're not gonna have any wood shake shingles, you're not gonna have wood siding. Everything is gonna be have an element of non-combustibility to it, whether or not it takes an hour for it, to catch fire with a direct flame on it or not. There's varying degrees of non-combustibility. So yeah, there's quite a bit there to uncover, but generally speaking, uh, it affects what you can put on your building. Even the window trim details, even your trellis, all of
in
that
and
cannot
around.
be wood.
In
Right,
and around. Yeah,
right,
there's the fire, there are the embers, and then there's
right,
heat. Extreme
right,
heat can
right,
ignite
right.
certain things, right?
And that's where we were talking about steel studs. But the potential of steel studs is a question, because when heat gets high enough, that's just going to melt
Right.
and it's going to soften, and now the structure is going to fail in a different way.
Right.
But
So there's
again, yeah,
non-combustible,
right,
and then there's fire resistive, right?
correct.
Not necessarily the same thing. So fire
Nope,
resistive gives you a little more time
right,
before you have the total loss.
right, right.
Non-combustible is the preferred, but
It will not catch fire no
yeah,
matter, like, yeah. So the fire resistance might have a 1 hour rating. People have heard of that maybe. So it takes 1 hour of, like, generally speaking, the idea is 1 hour of flame on it for it to catch on fire. It gives you 1 hour to get out,
yeah. I
in
actually have
some
a client
cases.
who builds like metal studs for residential construction, and one of their questions was, well, can we put in our marketing materials that if people build with metal frame instead of wood frame, that they qualify for a discount? And the
Sure,
answer in reality is it's not enough,
right.
because just because your frame is not made out of wood,
Mhm,
what is your roof made out of? What is the surrounding vegetation like? And do you have all the different types of clearances and all that kind of stuff? So it's, one out of the 10 different items is just not enough. But yeah, speaking of roof, Class A fire rated roof,
Sure.
you probably have a better understanding of what
We do that
Class
in
A.
everything we do anyways.
Yeah,
Yeah, yeah,
and I mean, Southern California is probably standard. I would say maybe
absolutely.
in terms of like new building construction.
Yeah, well, there's whole cities that are fire zones. Like, for example, La Cañada, you cannot get away with anything other than a Class A roof.
Right.
So that an ember falling on your roof will not it will not cause it to catch fire. But if generally it's the openings on the roof that are the issue. So once it gets
Enclosed
in your,
eaves is
yeah,
the next one.
exactly. So once it gets in your attic, I've heard the fire, department say it's game over. Like, once it's in your, once there's an ember and a fire that starts in your attic, you cannot, unless you've got fire sprinklers in your attic, which I've seen people have, which probably is on your list. But that is, a huge concern.
I see fire resistant vents, enclosed eaves, multi-pane windows,
Yep.
functional shutters, non-combustible vertical clearance from bottom of exterior surface. And it's actually a short list that
So maybe we can,
qualifies you for
huh,
these fire score zones. It's a short list, but
Yeah.
it's got to be all of them. And if it's some of them, like, for example, if you just put a fire resistive roof or a Class A rated roof,
Right.
you might get like 1% discount. Well, 1% discount from what?
Mhm.
There are a lot of different factors that go into how the pricing mechanisms for insurance, for property insurance, right? Um, so it's not like 1% off the total premium.
Mhm.
It's
Mhm.
1% of maybe I don't even know what to call it, but there might be like a factor that's called fire zone factor,
Mhm.
and it makes up 3% of the total premium. And you might get 1% discount off that 3%. In some cases, it's not going to amount to much. So there's a whole lot of hullabaloo here that
Yeah.
may not really be all that
There's
substantial, but
there's
that's,
girl math and then there's insurance company math.
well,
There's just
and then there's government, regulation math.
right.
Um, so
Got it.
I don't want to start any type of conspiracy theory against government or anything like that, but there's a lot
Yeah.
of show there's a lot of performative art going
Mhm.
on from, from different avenues to show that people are actually trying to help. But, what does it really amount to? And maybe, look, installing these various control mechanisms is a good thing. Whether it's going to save somebody 20, 30% on their insurance premium is a completely different subject
Right.
matter. The answer is probably no, it's not.
But some of them are no-brainers for the
Yeah,
location,
yeah.
right?
Might it be advantageous for somebody to implement all of these things?
Mhm.
Yes. If it's going to
Mhm.
save your home from a
Mhm.
wildfire, hallelujah.
Mhm. Mhm.
But if you think you're going to save, $6,000 on your insurance premium, that's a very different story. The answer is probably no. It's probably not.
Okay.
So, people want to know what they're going to save. The important thing is you're going to save your house or your building.
Right.
Don't be too focused on saving the $300 or the $2,000 on your premium. It's important, but that's not what the primary goal of this measure is.
Okay. All right. Well, thank you for this. Abe, in closing, I just want to ask, is there anything else you want listeners to know?
Gee, putting me on the spot. I can't think
Well,
of
I
anything
mean,
that I haven't mentioned.
we're gonna add your permission and recommendation just to be able to add your website, I'm sorry, your email address and the show notes.
Okay.
In case there's a additional question or something like that.
I would say that if there's anything people ought to know is this. If they can't figure out who to contact, their insurance professional to contact, or if they contact that person and they're not getting the answers they're looking for or the
Yeah.
kind of help they're expecting, and they don't know where to turn, I'm happy to give people guidance, advice. I'll help them in any way that I can. So by all means, share my contact information, my
By the way, that's
email
very
address.
gracious of you. And
My
I
email address, my business telephone number. You can't give them my cell phone number because
no,
sometimes my
because we
wife
have to go to
answers.
sleep sometimes.
Well,
Yes.
sometimes my wife
Yeah.
answers
Yeah.
that phone. So by all means, if people can't get the
Yeah.
information from their insurance professional, but their first call, I believe, I
Needs
mean,
to be, yeah.
this
Go
this
down the
can be
route.
this can be debated. Should it be your mortgage company? Should it be your bank? Should it be your insurance company? It could be debated. I think a good place to start is your insurance professional
Okay.
because they have a lot of information that the policy holder, probably doesn't have. And they
Okay.
probably have information at their fingertips that is going to be helpful to you. And in many cases, they have free guidance that they can offer you. That's going to be
Mhm.
very helpful. And they may have plenty of resources that you can tap into.
Mhm.
And your insurance professional probably has a lot of professional contacts that
Right.
might be helpful to you. So I know uh, people like yourselves,
Yes.
architects,
Right.
engineers. I know
Right.
um,
Yeah. A network
um,
of professionals. You might even know third-party adjusters and attorneys.
I can refer people to public adjusters and attorneys if that's
Right.
where they want to go or that's where they need to go. Um, so a lot of resources that you can access through an
Sure.
insurance professional for sure.
Right.
Um, and then I would say that's probably the most important thing that people should know. And then if they have to call me, by all means, I'll give people as much guidance as I possibly can.
Amazing.
And
Truly
then
amazing. Thank you.
policy, got to get a copy of that darn thing and
And
pour
hopefully
through it.
a lot of people grabbed it on their way out or they have it in the cloud and it's easy, hopefully,
Right,
right?
right. But the insurance professional certainly has access to a
Right.
copy, full copy of a policy, and then the website for the Department of Insurance, where there are plenty of resources to tap into, is again insurance.ca.gov.
Okay, awesome. Thank you. Thank you. Thank you, Abe. Thanks for all your expertise, your insight. I hope
Well,
it's helpful to,
uh, I hope so. I think what you guys are doing is great. Tremendous service to the
thank you.
public. So I wish you well with your podcast.
Thank you.
And
It's we started it before the wildfires happened. And so we've definitely had to shift things a little bit, but we appreciate people like yourself who are willing to devote their time to make this happen. Thank you
you're
so much.
welcome.
It's teamwork.
Yeah, you're welcome. I mean, it takes a village, right? And they need a lot of people who have a lot of resources. I mean, tap into as many people as you possibly, if you suffered a loss.
Right.
Tap into
Right.
as many people as you can. Talk
Yep.
to everybody. Talk to your financial advisor. Talk
Yep.
to your
Yep. Yep.
real estate broker.
So
Everybody's got professional contacts that you can tap into and use as much of it as you possibly can.
yeah, absolutely. Again, thank you for your time and
You're welcome.
stay well. Thank you for joining us for today's episode. Katie and I hope you found it insightful, empowering, and maybe even a little inspiring. We're so grateful to share this space with you. Be sure to subscribe and stay tuned. There's more to come as we continue architecting bold ideas, even in the face of challenges.